Welcome back. You're still watching Trading Hour on CNBC TV 18. For the markets, it's still a near 300-point cut on the Nifty that we're looking at. The mid-cap index is pretty much in line with the frontliners today, so that one is also around 520 points lower. And the Nifty Bank will also be up for you. It's seeing cuts of over 700 points, so it's around 2% in the red for the Nifty Bank. The few stocks which are holding up today include some of the metal names, the likes of Tata Steel and Hindalco holding up. ITC, by the way, is holding up in this otherwise very weak market. And you have some of the pharma names also now inching higher in the past 10 odd minutes or so. The likes of DRL, Sun Pharma now moving into the green as well. But let's do one thing. We'll talk about the consumer space as well, because that pack has been really under pressure in the past week or so, ever since the Russia-Ukraine crisis came to the fore. So today you have Asian Paints, which is a big loser. Tata Consumer, HUL are the other stocks which are tanking in trade, and this is sort of on the back of rapidly increasing commodity costs. In fact, because of the escalating Russia-Ukraine conflict, it has pushed pretty much cost of all of the commodity prices higher, like we were just speaking to Manisha about as well. And what we're looking at today is how this impacts the entire FMCG sector and some of these individual companies. Manglam is standing by to take us through details on that. Manglam.
We have seen the commodity price inflation. In fact, crude and palm oil prices have been higher by almost 35 to 40% from the end of the last quarter itself. And remember the word that every management of FMCG companies used in the third quarter, which was unprecedented inflation. And over and above that, we have 40% higher. Crude and palm oil prices, which account for a large chunk of the input costs for companies like Pidilite, GCPL, Asian Paints and HUL as well. Brokerages believe, Credit Suisse for instance believes that these companies will have to further take 10 to 20% sort of price hikes to mitigate this kind of inflation. And remember, for companies like Asian Paints, etc., they've already taken a 20% price hike in the first 9 months of this year. Tata Consumer, which is another stock which is underperforming today, has a relative safety net around it because tea prices, which is among their key inputs, are actually on a deflation trend, but today everything is seeing a fair amount of sell-off. The earnings impact on that, JP Morgan estimates could be anywhere between 2 to 7 odd percent. And we've been speaking to a lot of managements on our channel here itself. Parle, for instance, the ones who make the Parle G glucose biscuit, said that palm oil is at a record high and the Russia-Ukraine crisis may have an impact on wheat prices as well. This was just before the escalation had began. And now, as we see, wheat prices too are very close to near 14-15-year highs, and that's impacting biscuit makers as well. Indigo Paints yesterday joined us on the channel saying that the industry may have to take another price hike in the solvent-based part of the portfolio in the start of the next month itself. But amidst all of this, there's one stock which by virtue of doing nothing is outperforming, and that is ITC. Why is that? Well, because over the last few years, it has underperformed the index. And secondly, at 17-18 times FY23 earnings, ITC has valuation support. And thirdly, a large part of their business, which is tobacco and hotels related, is likely to benefit from the unlock theme itself. But amidst this correction, it's also important to look at valuations, how they stack up, and the kind of correction that we've seen in the FMCG stocks. The index has corrected about 19% from the highs. That's the FMCG index that I'm talking about. But a lot of the nifty companies, the kinds of HUL, etc., have seen a cut of anywhere between 31 to 37% for Godrej Consumer. Tata Consumer itself is down around 26%. We've seen a big cut on Britannia as well. Valuations, which earlier everyone was talking about being extremely expensive for FMCG companies. Case in point, something like a Titan, which was trading at 81 times at peak, despite this correction, is trading at just around 75 times. And for companies like HUL, which was earlier trading at close to around 60, 62 odd times, is currently now trading at 43 times. So, as compared to their historic valuations, we are seeing some normalization for FMCG valuations. But then again, this is on projected FY23 earnings, which we don't know yet, because the inflation impact may cut the E out of the PE by about 2 to 7%, as JP Morgan says.
And the high commodity inflation may result in demand destruction as well, not just margin pressure. But Manglam, thank you very much for highlighting that. Let's take the discussion forward. We're now joined by Shirish Pardeshi, the FMCG analyst at Centrum Broking, now on the phone. Shirish, first your thoughts on Asian Paints. Have you changed your expectations of volume growth and the margin performance for FY23 based on what we are seeing? And if yes, could you talk by how much?
I think you're right. Your observation is completely in agreement. But what I'm seeing at this point of time, the volume growth for Asian Paint is not only driven by the decorative, which has a direct impact of the inflation, but you have to also consider that this company is also having a putty and distemper business, which is traditionally doing very well. And in addition to that, the waterproofing business has also been at their helm, which is helping them the volume growth. So I do see that the decorative emulsion might have seen the impact of price increases and might slow down. My best estimate is that the decorative paint business should grow about 5 to 6% volume growth, but the overall volume growth will be much higher, as seen in last 4 to 5 quarters, in excess of about 50% odd. While in terms of expectation, yes, 40% or 42% to be precise, the raw material which is directly related to crude, and this imported inflation of crude is definitely have the impact. And as you have mentioned, that Mr. Jalan also confirmed yesterday on the CNBC channel that solvent-based products has seen excess of 40% inflation. So I at this point of time want to see that the price increases which has happened in the range of about 22% is already got digested, but further inflation, and if there is a price increases which has happened, will definitely impact on the margins for the company.
So this putty, which is doing well for Asian Paints, is 30% of their portfolio, right?
Little less.
Little less than that. And that is unaffected completely?
That is unaffected.
Okay, so net, what does it mean? Do your EPS estimates come down, and is the stock a buy?
At this point of time, what we have considered, the inflation which has happened and the price increases which has happened, will definitely have the impact, positive impact in Q4 earnings. However, we have to also see that the crude which is inched up more than $100, we might see that there is further inflation if the war doesn't get stopped. And then we'll have to consider after this quarter whether 23 earnings will get us back. At this point of time, prima facie, when you extrapolate the current situation in FY23, yes, there will be earning cut. But then we'll have to see the impact after Q4 earnings.
Shirish, good morning and thanks for joining us. If you can talk about stocks like HUL, Pidilite, which Mangalam was just highlighting, they will need to sort of hike prices by 10 to 20% if they are to try to, mitigate this inflation cost pressure that we've seen. Do you think in the immediate terms, I'm talking about say Q3, are we likely to see, what kind of margin pressure are we likely to see? I mean, I know there will be some, but how much are you factoring in right now for a cut on the margins?
I think my pure view is that the inflation is hitting 4 ways. The first is that direct input raw material, which has seen some deflation on a month-on-month basis. But however, I completely am in agreement with that palm fatty acid derivative, which is a palm oil derivative, and also the linear alkyl benzene, which goes directly into manufacturing of detergent. These two things which will have an impact. But you are also ignoring that packaging material for all these companies are in the range of about 8 to 10%. And that is also hitting because we don't know whether the crude will have an impact. So there is an indirect inflation which is happening. The third thing which I'm saying that the fuel inflation, which is also hitting. So it's an indirect inflation which is hitting maybe on the transportation cost or indirect cost to the channel. So I think that is one, but we are also ignoring at this point of time the media inflation, which is running ahead of 12-13%. And I think when I consider these all 4 things, what has come to the benefit of the companies is that when you look at past 3 quarters, most of the companies have cut ad spend, and that ammunition which is still available for the companies. However, we have to also consider that the price increases which has gone into the trade will also have the impact. But if further inflation which happens, I think people will, most of the company will take hit on margin. So my sense is that about 300 to 400 basis points on a YY basis, the correction in the margins should happen in Q4.
All right, Shirish, thanks very much for joining in with your quick